Welcome back to the channel. This is Matt Garland, NMLS number 58700, better known as MG the Mortgage Guy. We are live. We are blessed. Thank God for another day. Make sure you guys who are new here, like, comment, share, subscribe, and hit the bell for notifications. Bing! There we go. Hit the bell for notifications, right? And make sure you go to mgbookstore.com. Pick up the latest and greatest books. You know I'm an international speaker, best-selling author. Don't ever play yourself. Go get the books. Go learn something today about real estate. All right? Oh, and also make sure you guys join EYL University by going to EYLUniversity.com. The new and improved EYL University, powered by Recession Proof. All right, today we're having a great conversation. We're talking about side hustles, right? How to make some money. First of all, throw some gems in the comment. Fuck the gems. I hope you got a pen and pad because I got a certified gem dropper in the building with us today. All right? We got my man, Jeff Granger, in the building. Jeff, what's good, my brother?
What's good, my guy?
Welcome to the lab, bro.
Listen, I appreciate you having me in the lab, man.
Welcome. So look, tell the people who you are, what you do, give a brief introduction, and then we're going to get right into this.
My name's Jeff Granger. I, along with my wife, own Granger Financial. It's an insurance and financial firm based out of Northern Virginia. And I tell you what we do is we help families protect their legacies. We help business owners further their dreams. And at the end of the day, right now our goal is to put more black and brown people into the insurance and financial industry so that we can change the narrative of our neighborhoods.
Change the narrative of our neighborhoods. I like that. And we also got super
You don't even know what it is.
I don't even know. Super production producer, fake ass co-host, unofficial ass co-host. Tukes Productions in the building as well. Shout out to Tukes. Tukes is in the building. All right, so we're gonna have a great conversation. Tukes, you set it off since you are the audience. All right, we had an offline conversation, so let's start off with that offline conversation we was having about this topic. All right, okay. So the floor is yours.
All right, so the topic of this video is how you can make six figures selling insurance. So I guess the first question is, how do you even get into selling insurance?
You reach out to somebody like us. You go follow us on Instagram. I get a lot of DMs about how to get into the insurance business because people see it. But one of the things people don't know is that you can turn $300 to $500 into a real life career. It doesn't take much to get into the insurance business. All you have to do is study and take an exam. That's not hard.
Okay.
And you can turn that $300 to $500. But guess what? My business, when you go take that exam and you pass it, we reimburse you for that fee because our mission is to put more people into the insurance and financial services business from our community. So the test really, 3 days to study.
Okay.
1 day to take practice exams, then go take your test. It really isn't that hard.
Okay. So where do I reach out? Like, where do I find somebody who can sponsor this test, or where do I get the information for this?
So there's several different test guides. One is ExamFX, which we use.
Okay.
I have a discount code. If you don't use our discount code, you'll pay $169. With us, you pay $99 because we send so many people through. There's another one called Cape School Online. There's Kaplan. Everybody knows Kaplan for exam prep and stuff like that. And then there's some other ones like Big Daddy University that you can go on and get your study materials. And guess what? The cool part is you really don't have to be sponsored by me. You can go do this on your own. I've had people go get their licenses and say, hey, Jeff, I saw your video. I'm licensed now. Can I have an opportunity? Right. Absolutely.
What's the cheapest option? Because I know there's people out there, maybe it might be tight on money and they can't spend $500. Is there a cheaper option to take this test?
Not really a cheaper option than that. Okay. I think that's really the cheapest way to go about it. But understand this, if you put the skin in the game with Granger Financial, I can't speak for everybody else, we're going to reimburse you that licensing fee when you come on board with us.
Okay.
And the reason being is because, Tukes, if I pay for it up front and you don't study and you don't go take the test, I'm out of $500. How many times can I do that before I run my business in the ground? Yeah. But if you show me you're going to put the skin in the game first, at the end of the day, once you come on board, we're giving you that money back. Because guess what? we know we're going to be able to show you, we have a proven system.
Right.
We have a proven track record to be able to show you that $500 can easily make you $50,000 in a year.
50K.
50K inside money. I just had one of my guys last month. No joke. He sold 2 policies, made $10,000.
Off 2 policies?
Off 2 policies.
What was the amount of these policies?
So one was an annuity. One was a gentleman retiring. He had a TSP plan. And instead of keeping the money into the stock market, because interest rates are starting to go up, we got him into a fixed rate 6% policy where he's going to get 6% guaranteed for 10 years. Doesn't sound like a lot, but for some people that don't want to lose money, that are afraid to take the losses in the stock market, or they're in that retirement red zone, give them that 6%. It was $140,000. Commission on that was 7%. You do the math.
Explain what an annuity is for those people who might not even know what an annuity is.
Got you. I think everybody here knows what Social Security is, right?
Yeah.
That's an annuity. That's a form of annuity payment, right? Other people know what disability is. It's a form of annuity payment. But if you look up the word in the true terms, it's a stream of income that you can't outlive. So an annuity is basically a stream of income that you can't outlive. So you can buy a product, right? And then you can annuitize that product. Annuitizing it means I'm going to turn on the income. So I'm making this total numbers up. If I put $100,000 into this product, and at age 65 or 70, the product's at $200,000, making it up. I can almost guarantee every month I'm going to get $1,700 a month for the rest of my life. Those numbers may be off, but I'm giving you the premise and the concept of what an annuity is and how it works. Now that $1,700 a month comes every month as long as you're alive.
You say comes every month in terms of like?
The life insurance companies are going to pay you that $1,700 every month.
Okay.
Because it's based on your life expectancy.
Got you.
And what insurance companies are really good at is that they play both sides. They sell you term insurance, right? And then they can sell you annuities. Why? Term insurance, a lot of people buy. Everybody says buy term and invest the difference. But only 2% of term policies are really ever paid out. So 98% of the money that you pay into your term policy gets kept by the insurance companies. That's why they can pay out these higher interest rates on whole life. That's how they can pay out these higher interest on annuity payments and annuity interest rates when you get it through a fixed rate. Does that make sense?
It makes sense, but so all I have in my head right now is they pay you on a monthly basis based on your life expectancy.
Absolutely.
How do they calculate that though?
It's called mortality credit. That's a great question.
Okay.
So if you had 100,000 at, how old are you, Tukes?
31.
31. So 100,000 at 31, you have a longer life expectancy, right?
Right.
So the insurance company is going to say, this dude's going to live a long time, and I got to pay him for forever, for as long as he lives. Not forever, for as long as he lives. So we're going to give you $400 a month. But someone that's 70 has a shorter life expectancy, right?
Yeah.
So we're going to give them $1,300 a month. Because their life expectancy is a lot shorter. So we're going to give them more money. So the payout rate is a lot different.
Okay, that makes sense.
So if we do 400 divided by $100,000 that you put in, right? So 400, so that's 4.8%. So 400 times 12, which is $4,800, right? Divided by the 100,000 you put in, that's your 4.8% payout rate. That's not bad.
Right.
But it's not great. You could do better in the market because you're 31.
Yeah.
Now, someone 70, if they're making this up, $1,000 a month, just for quick math, that's $12,000 a year divided by the 100,000 they put in. That's 12% guaranteed.
Yeah.
MG, if I told you I can give you 12% guaranteed for the rest of your life, would you do it?
Absolutely.
That's what annuity payments do. They guarantee stuff for you.
Okay.
All right. Does that make more sense?
That makes sense now.
That's
makes sense.
my job, is to help dumb it down and make it make sense to the person that doesn't understand.
All right. So what's TSP?
Thrift savings plan.
Okay.
Most people that have thrift savings plans are in what? Government jobs, right? They're in the military. They work in DC government or something like that. A comparative to a TSP is a 457B plan for teachers, if you're a teacher out there, or a 401k for the regular employee that works in in a regular job. And guess what all of those plans are? Just sections in the IRS tax code.
Break that down a little bit.
Breaking it down, 401k, the name came about because if you look up the IRS tax code, section 401k talks about retirement plans for individuals, right? So where a lot of EYL does a great job, the rest of the crew do a great job of breaking down what it means to the average person and how their retirement plan works, right? So what I love about it is the fact that if you put all of this money into your 401k, it grows what? Tax deferred. It's just a deferred payment plan for the IRS, if you really think about it. That's why what you do in teaching these people about real estate is huge, because that's real money to me right now. But in the 401k, if I put $1 million in my 401k and I go to retirement, do you know what what taxes are going to be in 2065?
No.
Are they going to be lower or higher?
Who knows?
You don't know.
We don't know. Have taxes ever gone down?
I mean, I wouldn't think so, but
So most of the years they've always gone up.
right.
So if I got $1 million and the tax rate is 40% federal, I've saved $1 million. Great job. But if I take it all out, I'm only going to get $600,000 back.
Right.
So that's why it's important to pay attention to what EYL is teaching you, to where you can have your own brokerage account that's set up aside, using your Roth IRA, importantly, buying into real estate that cash flows you money, that you can touch real time. And then you determine the tax by how you set up the rest of your life.
Okay. So now I forgot to ask you before, how long did it take for this to study for the test?
Depends on you. I tell everybody it depends on you. The reality is everyone in our job, I just had a gentleman that went through testing. His name's Deep, came out of banking, and he did the test in a week. I gave him the book on a Monday. He's finished studying Friday, took the test the next Monday, he passed. And guess what? He got a 73. You only need a 70 to pass. I tell people, C's get degrees.
C's get degrees.
C's get degrees. Hey, anybody in here have a degree? The last person that asked me for my degree, nobody does it. My degree doesn't have my grade point average on it.
That's a
It
fact.
doesn't matter. Yeah.
It doesn't matter. So once you get the certificate, you got the certificate.
Yeah.
So you don't have to worry about those things.
Right. Okay. So now you get this test. What's the next step? Can you just work for somebody like you, or like for your firm?
Yeah, you can work for someone like me in my firm, or you can go to any of the major insurance carriers out there, because a lot of people don't know that this industry is as lucrative as it is. When we looked up what's the #1 maker of millionaires in the United States, what'd you guys find?
Financial services.
Yeah.
Insurance and financial services. It's real. It's right there. You determine how much money you make in this business, okay? And State Farm, you could go work for them. Geico, you could go work for them. Progressive, all of these companies out there need PNC agents, because nobody in their right mind wakes up and say, at 6 years old or 10 years old, I want to be an insurance agent. It's not
true.
sexy.
Yeah.
But guess what? I'm going to make insurance real cool for you, because I promise you I can do anything that anybody else does out here. And most people don't know, your local insurance agent, if they're a good one, grosses more than your local doctor.
Really?
Really.
So, okay. So now, does it matter what type of
I
insurance
got
you're
him
selling?
intrigued now, MG.
You see,
Does it
he
matter?
ready now.
The light bulb went over
Light
his head.
bulb went off. He moved the cords around. And let's talk that talk.
So does it matter what kind of insurance you're selling?
It does matter what kind of insurance you're selling. So
Okay.
property and casualty, for layman's terms, is your auto and your home insurance and business insurance.
Right.
Right? Then you have life, health, and annuities. That covers your life insurance, disability insurance, and annuities is its own separate element.
Okay. So you can make six figures in any type of.
Absolutely.
So
It's harder to do it in property and casualty, but property and casualty gives you residual income. So now we're going to talk about, we can get into the nuts and bolts of how you can really make money.
Right.
And that you sell a policy once. If I sell you, New York has very, very high car insurance and home insurance rates.
Yeah,
But let's
yeah.
let's just say, what's your car insurance rate? Throw out a number.
Mine is 361.
361
Yeah.
times 6 months, so that's about $2,100,
Yeah.
right? So $2,100, and let's just say the bare minimum commission is 10%. That's $210 you just made off one policy. So let's
Also, well, mine's like 6 month.
yeah.
term,
So that's even
yeah,
better.
Yeah.
So now I get paid $210, 6 months out of the year. So I'm gonna make $420 off you. And I hate to say it like that. We'll make $420 off that policy.
Right.
For being the agent of record for that policy, servicing you, guiding you the right way, making sure the coverage is intact. And I don't want you guys just to think this is a money play for insurance agents. This is my passion. We love to help people and make sure that they're on the right track with insurance, not only their car insurance and home insurance, but their life insurance as well. I can give you a real life example. I have a little cousin who she was 22 years old at school at University of Maryland, Eastern Shore. I opened my first agency and I made her buy life insurance. And she's like, why I gotta buy this? I'm like, you need to have it. She's like, no, you just want me to have it so you can make money. Well, the next year, she had a thyroid condition where they had to remove her thyroid. So she wouldn't have been able to have insurance because of that condition. But because I made her buy the policy before,
She's grandfathered in.
She's grandfathered in. We protected her insurability. And that's what happens in the black community that we kind of go sideways on. We wait till Auntie Johnny and Uncle, whoever get 65 and 70 when life insurance is exponentially much more expensive to try and put coverage in place.
So now, does it matter what state you're in and where you're selling at? Because right now we're in New York. So like, if you go to a different state, do you still cash flow the same or no?
That's a great question. So no, each state has different premiums because the cost of living in each state is different.
Right.
The amount of people concentrated in one area is different.
Right.
So I live in Northern Virginia. Northern Virginia rates are probably half what Manhattan rates are.
Okay, so you have to hustle more than I'm assuming.
You do, but guess what? The other thing you have is you have less claims probably, right? Less frequency and severity of claims because of the area that you're in.
Right.
That's also determines upon your rate. And that's why John Henry is so clutch in what he's doing. And I talk to John all the time and tell him I love what he's doing because those factors that impact your rate in those states are antiquated because your credit score shouldn't really matter. It doesn't mean that you're a fast driver or a slow driver. You could have had COVID happen to you and lose your job and can't pay your bills. Why should that impact your car insurance rate? Why should the fact that they steal 80 cars in your zip code really impact you if your car's never been stolen?
Right.
So that's where John Henry's is doing a really good job at tailoring this thing to specifically who you are as an insurance purchaser. But I think our job, my job as an agent and my people that work for us, our job is to educate the community. And there's not a lot of people that educate. They only go to how much money they can make off of you.
Yeah.
And for us personally, if I do a good job by you and you trust what I'm saying to you, you don't leave.
That's true.
And that's how we create our competitive advantage.
So now when you're working for a company, right, and you get somebody to, let's say you get somebody to sign up for a policy or whatever it is, how does it work on, like, what if they cancel? Like, how does it work with cancellations and things like that?
Great question. Depends on when they cancel. So we charge back our agents. It's a sales environment.
Okay.
If I gave you, 50% of the commission of that $210 for the sale, and you canceled 3 months into it, the company's going to charge me back because you canceled.
Right.
And then I have to pass that back on to you for the cancellation.
So, okay. All right. So we're not safe then if something gets canceled.
No, you're not safe if someone gets canceled. But that's the beauty in the business. Our job is to make sure the customer is safe.
Right. Right.
It's not sell it and then you out the door.
Yeah. No,
Your commission and compensation is still tied to you making sure you service that customer properly.
Right. Right. That makes sense. Now, I'm not trying to sound like I'm just trying to get in there. You know what I'm saying?
No, I'm not saying
just-
you are, but a lot of people were probably thinking that.
Yeah,
right?
yeah. No,
Because-
that's what I'm saying. Yeah.
Because that's the fine line we draw between this business as a side hustle
Yeah.
versus this is our livelihood. This is how we provide for my 4 daughters, is that we make sure we take care of our community, and we do a lot in the community as well.
Okay. So now, how do we tie this into real estate, Matt?
Simple.
Uh-oh, he cleared his throat.
Simple, right? So let's talk about, I don't want the money to go over people's heads. And I agree
Yeah.
with you saying we're not doing this for the money, but look, we're not here to work pro bono at the same
Absolutely
time.
not.
We're here to run plays. And the topic of this video is how to make 6 figures. So you
Right.
broke down an insurance piece as far as for car insurance, right? Now, what about homeowners insurance? Because now you have bigger policies for the most part.
Absolutely.
And you're paying them annually. Is it the same typical 10% commission that you'll make
No.
off an insurance policy?
No, depending. So you've got carriers that'll pay you up to 26% for home policies. Especially like the newer carriers that are using technology and open AI to kind of search and vet out these homes that we're writing. They'll
Yeah.
pay you up to 26% commission.
What?
So let's say we write a big home, 3 to 5 grand. You talk about 26% commission, you're over $1,000 commission on that one policy. And guess what? Homeowners policies don't leave you the same way car insurance policies leave you. Because
Yeah.
guess what? Nobody wants to deal with what? Escrow.
Correct.
Don't mess up my escrow.
Correct.
I don't want to get a bill and get a bill, and then next
Yeah.
year I got another bill.
Banks are going to pay it automatically.
Bank's going to
Yeah.
pay it automatically. Don't mess up the escrow so people pay it and they get comfortable with it.
Absolutely.
It's
And
like
they never change.
it never changed.
Now, is that residual every time they renew on an annual basis?
Absolutely.
So it's a 26% commission every single year?
Yep. Every single year. So it ranges from 10 to 26%.
So let's just use a low number.
Low number,
Let's
I
call
would
it 10%.
and I would say that's low for home.
Okay, so let's call it 15%.
14 to 15%, I'm all in with you.
Okay, cool. So if you got a 15% on $1,000 premium, just using easy numbers, that's $150.
Absolutely.
And when they renew, which 9 times out of 10 as a homeowner, you're going to renew because you're not even thinking about it.
Yep.
Your bank is paying it automatically. When the bill is due, they send that escrow money.
Yep.
So now you, as the originator, insurance agent, you get another 15% commission
Every year.
every single year.
And that's the residual income that we're talking about. And that's how I tell people you can own an insurance agency is quite like owning real estate, man. The renter is the customer. Every time that renter pays their rent, you take whatever your portion is after you pay your mortgage, or if you don't have one, it's all profit, right? Just like in an insurance agency, the customer pays their premium, we get our commission. And we get that every year or every 6 months. And if you think about it, you're only talking $150, right? Think about it. The average producer in my office is writing $50,000 to $80,000 in premium themselves
On homes.
on all policies.
On policies,
So let's
okay.
just say $80,000 in premiums times 10%. That producer
That's
is
$8,000.
netting, they're bringing $8,000 into our agency every month.
And then they get the cut between you and them.
That's right.
On top of that, right?
That's right.
So what is the typical cut?
So it depends, right? If you're a straight salesperson, I'm gonna give you 50%.
What do you mean by straight salesperson?
So sometimes I have a hybrid between sales and service, right?
Okay.
So straight salesperson doesn't answer any of the service calls in the office. I have a service person set up to do that, where they can take care of the customer and add a +1 value later. But if you're straight sales, you're a trained assassin. Your job is to go out there, network, build relationships, let people know the products that we have to offer, teach them why we're the best agency that they should have and what our competitive advantage is. Because guess what? The last time you two walked in your insurance agency was never.
Facts.
Me, I never walked into no. Yeah. I
Never.
walked into no.
Exactly. So we have to be out here doing things like this, right? Having relationships that we have with you, so that people can understand who Granger Financial is and what. And I want my insurance to be with them, because we're mission critical.
Yeah.
We're not here to just make money. We want to put people back in the community. I can sit here on this camera and say that our agency and my wife and I, coupled with our community, have raised over $40,000 and sent 8 first year college students in the family to college with $5,000 scholarships. So I can say that we do that. So when people say, oh, they just out to make money. Nah, we put it back. We put our money where our mouth is.
I like that.
We get out and get moving. And anyone, we have 3 offices and 2 satellite offices. Our 3 main offices have to do something in the community every quarter, or you can't be a part of our agency.
Do you think it'd be more profitable to make it an online? Is like a big difference between selling insurance online and in person?
Yeah, online, in person, however you want it. But the main thing is if I leave it to you to go buy your insurance online,
right?
You aren't educated in insurance. You can leave yourself grossly underinsured. Give you a prime example. I'm full of examples.
Yeah.
My neighbor lives in a $1.2 million home, something like that. Has a pool in the backyard, drives a Ferrari. I don't. I drive a 15 Jeep Cherokee. Car's not my thing, right? But I went and he's like, yo, I want you to review my insurance for me. And he was with a major carrier. He had state minimum liability limits on his Ferrari. And what that means is if he got into an accident, his Ferrari's worth probably $200,000-$300,000. He only had $25,000 worth of coverage on his Ferrari.
So then why he's got to...
Anything on top of that, you're responsible for the rest. He only had $100,000 worth of liability coverage on his home. He got a pool in the backyard. My kid go over there and drown in their pool, and I know he's got money. I'm going to sue.
Yeah.
I'm going to sue you. You live in a $1.2 million house. You can't tell me you ain't got no money somewhere else.
Right.
The insurance company's only going to pay out what's stated on the policy limits, which is $100,000. You're responsible for the rest.
Damn.
A lot of people don't know that, right? Like these are the gems that it's like, that's why I need an insurance agent.
Right.
That's why buying it online, if you don't know the business, you could leave yourself really, really in a situation.
Especially the more assets that you have.
The more assets that you have. You want to have an umbrella on top of that. You want to have $300,000 to $500,000 worth of coverage on your home. If you have a job that you make $100,000 or more, $50,000 or more, you have a home, you have a 401k. In certain states, if you're in an accident and you're at fault, all of those assets can be party to that lawsuit. Give you a prime example. Another example, I'm full of them, right? I was working at a Fortune 50 company, and they had a case where this lady was driving on the I-10 bridge in Louisiana. She runs into the back of this car, and they're on the bridge. The people had to be airlifted out. People got lawyers. She was in a really, really nice car. People got lawyers. They sued her for $989,642.76. Why do I remember that number? Because that was every dime this lady was worth. We're in a litigious society. Lawyers go out and will sue for anything. Yeah. And let them find out your information. Oh, it's a wrap. Damn. So if you don't have the proper coverages in place, you leave yourself exposed. Insurance backstops everything. That's what we do. Damn. Can't get a mortgage without insurance, right?
You can't get a mortgage without insurance. You can't buy a house without no insurance, or you're going to get forced place insurance.
Ooh, and that's 3, 4, 5 times.
Yeah, that's 4 or 5 times easy. Yeah. What a traditional policy would be.
Absolutely.
So, all right, I'm glad you just said mortgages again, right? So let's talk about mortgage protection insurance. What is mortgage protection insurance? Can you break that down?
Yes, I'm not a fan of mortgage protection insurance, right? Because these companies, they sell you a policy that says, hey, if you die, it'll pay off your policy.
Right.
Which in essence is great. But mortgage protection insurance goes down as your policy goes down, as you pay your mortgage down.
Okay.
So for me, it's like I'm paying the same premium for 30 years for something that decreases in value. When I told you 98% of the people outlive their term coverage. And a 30-year mortgage is a term, right?
Correct.
Yeah. What happens if you refinance? That mortgage policy doesn't go back up. It stays the same.
It stays the same.
So
if you refinance after 5 years, your mortgage protection insurance is still at 25 years.
That's right. They're going to try and sell you a new one. You're going to get a bunch of pieces of mail. I tell people just go out and buy a life insurance policy. Buy a term life insurance policy. At 31 years old, I can get you $1 million worth of life insurance coverage for less than $50 a month.
Really?
Yeah, in term, absolutely.
For how long?
20 years, how you want to do it? 10 years, 20 years, 30 years, you may be more than $50, but you can get that coverage.
Wow. And that's paid on a monthly?
Monthly or annual, quarterly, however you want to do it. The insurance companies have no, they have no issues with taking your money how you want to give it to them, as long as you pay them.
So just, you said $1 million?
$1 million.
So so if something, God forbid, happens, then what happens with that money?
Money goes to whoever your beneficiary is.
$1 million though.
$1 million, tax free,
Interesting.
totally income tax free.
So, wow, because my grandmother had passed away last year and she left it, nothing crazy. It wasn't anything crazy, but like if I would have known that, I feel like nobody in my family really has this kind of policy set up.
Yeah.
I mean, it's kind of, when things like that do happen though, it does get kind of sticky sometimes.
Yeah. And I tell people, I'll give you another thought process behind it. It's going to sound really crazy.
Yeah.
But I tell people in our community, like, the biggest investment you can make is on your elders and life insurance. And it's not to benefit from them. It's to help them leave a legacy. Why do you think when you drive past these older white churches in certain communities, they keep expanding and they're buying more land around them?
Yeah.
Because Mr. Joe and Joshua are leaving life insurance to the church, or they have life insurance in place, or the church is owning policies on them. What I've done, flat out, I got the approval from my mom and my dad. I sat down with them. I told them, I'm like, look, I got 4 daughters. These policies aren't for me. I'm blessed to be in a place where I can pay for them, but we're buying life insurance on my mom and we're buying life insurance on my dad, and I'm paying for it. And my children are the beneficiaries.
That's smart.
It's smart because guess what? The only thing that we know about everybody in this room is we're going to die at some point.
Absolutely.
I hate to be morbid about it, and people don't like talking about it, but that's where we miss.
Yeah.
So at some point, I know my mom and dad are going to pass away. But at some point, I know that will pass on to their heirs.
Right.
You don't measure the worth of a man by what he has, but by what he leaves for his children's children. Bible says that. That's what we talk about.
So the thing is, though, I think that the reason why this is, people don't really get it or even want to pay for insurance a lot of time is because it's not something that it's not like they can't actually do anything with it right now.
It's not tangible.
Right.
But that's not true.
But that's why I feel like it's not really even this topic is kind of like people don't like to talk about, like you just said, because of that reason. Nobody's thinking about what's going to happen when that day comes, but everybody is just living in the moment, Yeah. So how do you work around that as I guess an agent or when you're selling insurance to kind of,
So I tell people I've never sold a policy in my life.
Okay.
I presented things to people and they bought what they needed. By the time someone comes to MG, he's not selling a mortgage to them.
Right.
He's putting them in the right one that fits their need.
Facts.
I position myself, he's positioned himself as subject matter experts in their respective fields.
Right.
So when people come to me, I'm not selling them anything. Hey, Jeff, I've been thinking about this. I need this. Or if I say it to someone like, yo, you don't have life insurance in place? They know it's coming from a place of, this is what I do for a living, and I really care about the people that I put policies on.
Yeah.
And it's not coming from a place where I'm like, oh, I sold this dude a policy. I made $10. We going to party. No. It's coming from a place that we're mission critical.
Yeah.
If you don't see the mission and you see it, we're living it. If you couldn't see that, then I could understand someone not wanting to deal with it that way.
Right.
But I spent the last 14 years positioning myself as the subject matter expert for insurance and financial services. MGs, how long you been in the business?
20 years.
20 years in the business. By the time someone gets to you, you've got 2 books or 3 books over there.
Yeah.
They're not saying, oh, MG trying to get me. No, they're saying, I want what he's telling me because I know it's coming from a very special place that I can't get everywhere. That's right.
Shameless plug.
Gotta plug it.
Go get the books.
Go get the book.
Commercial break. So, all right. So let me ask you this, right? Because this is a great conversation, by the way. Great questions, Tooks. You got your what's they call it, health and life. You got your PC,
PNC, yeah.
PNC. But then you also, if you want to sell insurance, you got your, what's that, Series 6?
No, that's to sell investments.
That's for
Right.
that's for investment.
So
6 and 7 is for investment.
Yep. So
Okay.
Series 6, 65, and 7 is to sell investments.
Investment products. All right, so let's stay away from that topic because I don't want to go into that. I want to keep it insurance.
Yeah.
So,
I have those licenses, by the way. I have my 6 and 63. I just don't use it.
okay.
Yeah.
Because I would assume that it's much easier to move around and shake. Because
The regulatory
regulation-
environment.
The regulatory, yeah.
The
it's too
regulatory
much.
environment there, and then the price points and making money, right? It's harder for us as black people. Real quick, and we can move on to whatever. But, I mean, the average, you get 1%, 1 basis point on what's invested, right? So you've got to have $600 million or $500 million in assets under management to make 1% of that to really make $400,000 or $500,000 a year.
It's a lot.
It's a lot. How many black or brown people you know have that type of cash that will trust you with it at 31 years old? They look at you like, oh, he's young. He ain't been in the game long enough to know.
Yeah.
I've been there. So that's why I kind of steered away from that and just focused on the insurance and financial services.
So our audience, they always want money. They're looking to buy real estate. And that's why I wanted to have this conversation, because how it ties into real estate, you asked earlier, is because it's a way to bring in revenue so you can go buy real estate.
Right.
And now you know the insurance game, so you know how to insure yourself properly, et cetera, et cetera. And the fact that you're saying that you don't even have to be full-time doing this. You can invest $500. And now, is there any annual, like, continuing education?
So yes, there is some
and
continuing
fees that you gotta
education.
pay?
Continuing education and license renewals. If you're at Granger Financial, we take care of it for you.
Okay.
I want this to be a place where my people can understand that, look, they've given me an opportunity, because guess what? The real reality is you don't have to work. You get your life insurance license. You don't have to come work for me. You can go direct to one of these MGAs and you can get set up and keep going.
Typically, how much does this continuing education cost, though? Couple $100?
No, not even, like $50, $60.
Yeah, it's
Okay,
cheap.
so you're talking about you pay initially $500, you study, right? You pass,
You pass.
you get sponsored,
Get sponsored
and now you have a license to print money.
to print money.
And you don't even need to be full-time to do this.
Yeah.
You can be part-time working your same job, whatever you're doing. Just now you just have to, quote-unquote, network and have conversations with people and know how to do your paperwork so you can get paid.
That's it.
And just basically have conversations.
That's it.
That's it.
Everyone needs it.
Everyone needs car insurance.
Yep.
Everyone needs, if you're buying a house, homeowners insurance. And everyone should have some sort of
Life insurance.
term or whole life insurance.
Yeah.
So you got 3 avenues or 3 different streams right there, 3 different buckets. Is there another bucket or 2 that I'm missing here?
You've got the Index UL, which a lot of people talk about.
What is that?
So an Index UL, it takes the best of term and permanent insurance and puts it together, right? But what it does is it also gives you the cash value that in whole life, where you would get a set interest rate, the cash value in your Index Universal Life is tied to the S&P 500. It's tied to an index, right? So if that index makes any money, if it starts at 0 and at the end of the year it goes to 1 or 2, you're going to make a percentage based on whatever your policy says. So most of the Index UL illustrations are showing about 6.24%. And that's pretty doggone good. But it's like this. This is where we talk about home ownership, we talk about life insurance or insurance, and the congruency that they have. Homeowners, you can earn equity, right? You build equity.
Right.
And life insurance, you can build equity too. It's called your cash value. And that's an asset for you. When you
Okay.
go to buy a home, MG, on a mortgage application, what does it ask? Do you have
Insurance, yeah.
Do you have cash value in life insurance?
Yeah.
Life insurance becomes an asset class. It goes towards your net worth.
So now you have all these different 3 to 5 different buckets where you can make your money. All you just need to network and hustle.
Wait, I have a question though. What if you can't network and hustle? What if you don't? What if you're not like somebody who likes to be out and networking? Is
This
there
ain't the
another
business.
way?
This ain't the business.
I was
for
about
you.
to say,
Okay.
then this
All
is not for
Yeah.
you, and that's okay.
Yeah, that's okay. Like you can't if you got to sell.
Yeah.
Right.
You know what I'm saying? Like you can't sit behind your computer and like even if you are sitting behind your computer and just making content
Yeah.
and you drawing in leads and people calling you. And that's another way. I'm glad we just said that, right?
Yeah.
You don't have to go network. You could just make videos
Yeah.
about insurance and then have your information there and then just sit there and let your phone pile up. So yeah, you don't really have to network. The key is content.
But you still have to talk to people regardless. Even
No,
if
you're
those
gonna have to
leads come
talk to people because
Yeah.
you gotta now, if they inquire, you now have to explain the products, this, that, and the third, request information from them, blah, 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 blah. But do you have to go out in the street per se?
in. Yeah, that's what I meant.
Nah, probably not, because we have information and technology. You can just do YouTube lives every day
Yeah.
and talk about the product and build up your base that way.
I got
But-
one guy that got into the business because he just wanted to insure his family. He had a big family. And he's like, I'm not a big go out network sales guy.
Yeah.
So he's having Skype meetings with his family in St. Louis, with his family in Texas, with his family in these states, and he's just selling policies to those people on the phone.
Yeah.
That's crazy.
I mean, but think about it, right? You put in $500 to make $100K a year. But even if it's a low number, even if you put in $500 to make $5,000 a year,
What's your return on investment?
look at your ROI on that.
That's
Right?
like part time or that's either or.
It doesn't matter.
It's like whatever you want to
like,
make it.
if you got to look at the numbers, right? People know the price of everything, but the value of nothing,
Yeah.
right?
When we talked about,
that was a gem.
the price of everything, but the
Value of nothing, right? They know the price, but what does this value, what does it really do for you? So if I put in $500, you tell me I can make at least $5,000 off my $500. And I could just talk to all my coworkers, all my friends.
Yeah.
Yo, you buying a new car? Yo, let me do your insurance. Yo, you did
Yeah.
it? But like you can 10x your money easily. And now for people in our audience who want to buy real estate, think about it. Now you have an opportunity to create cash flow, another stream of income coming in where you're not really having to go out there and bust your ass behind it. You just having casual conversations about financial literacy.
Yeah.
Basically, and educating people, and then now it's like what I do.
Yeah.
I'm not always selling you a mortgage. Apply with MG.com if you need my help. But, you know what I'm saying? Like, if you need my help, we here to help you, but we're going to give you information every single day. So I think this was a very important conversation for us to have to share with our audience because it is a real estate channel, but a lot of our folks don't have money.
Yeah.
They're looking at ways of how can I run a play.
Yep.
Well, financial services is a play, and it can turn into a very lucrative career from what we're hearing from Jeff. And I know plenty of insurance people that make 7 figures, yo, because the key, y'all, is the residual income. I even thought at one time to leave the mortgage industry and go on the insurance side because of the residual. See, when I do a loan, I do one loan and I get paid one time.
Right.
That's it. If I write a policy, when they renew annually, guess what? I get paid again. Now think about it. Let's just say if I'm going to say I'm going to specialize in homeowners insurance, right?
Yeah.
I'm going to niche down. And I'm going to deal with all the mortgage people, all the realtors, everybody like that. And I'm going to just get my name out there. If I'm writing 25 policies a month, let's just say every policy is $2,000. That's 50,000 in policies every single month. Now, and if I'm making what you say,
Let's just say 10%. Go to your 10% for quick math.
$5K at 50 grand. So if I'm making $5K a month, that's $60,000 a year. Now, every single year, that money comes back to me. That's $60,000 if these people are renewing, and 9 times out of 10 they are renewing. That doesn't include the new money I'm bringing in.
Talk to him, MG.
Right? And if I'm adding another, and that's if my business is stagnant and it's not growing, I add 25 people every single month. For the next 3 to 5 years, you got to think about it. Now that 60,000 in 3 years went to 180,000. You see what I'm saying? Because every single year I'm adding 25 new homeowners, 25 people getting insurance from me. I don't even have to go above. I just keep it at the 25 without busting my ass. I got a system. and I'm making 60,000 a year, then it doubles up the next year. It's 120. The next year it's 180. The next year it's 240. You see what I'm saying?
Now let me give you a hack on that.
Okay.
Now, you said in 3 years, you got $180,000 in premium on your books.
Correct.
Let's just say you said, you know what, I'm out. I don't want to do this no more. The average rate to sell your book of business is 3x. So now he could take, let's just make it 200,000. MG could take that $180,000 book, right, which is going to generate him, let's call it 18,000, no, just 180,000 a year, because that's what we went to.
That was my net, yeah.
Right.
That was his net. So we're going to just call it 200,000 and multiply it times 3. MG could sell that book for 600 grand.
To who?
To whoever, he could sell it to me if I want to buy it. And why would I want to buy it? Because now I'm taking that extra $180,000 and that's cash flow for me. Right?
Residual.
Yeah, I can get a loan. I get a loan for the 600, give MG his money. Now I got 180 coming in. The loan on 600,000 may be 2-3 grand a month for 10 years, 4 grand a month for 10 years, 15 years, whatever I do.
Yeah.
And now I got 180 divided by 12. What's that? Right?
Damn. What's
180 divided by 12, MG? Let's just do
180 divided by 12.
That's like 1 point. What?
15.
15,000. So that's $15,000 a month that I've just cash flowed, and I'm paying out. Let's call it 6 grand on a mortgage on a note that I gave MG for 600,000.
Yeah.
Right. I'm still netting $9,000 a month for buying that book.
Yeah, that's crazy.
It's no different than owning real estate, bro. It's the same thing. It's just a different play. And MG gave a gem, so I got to drop one too. Price is only an issue if value is absent.
Price is only an issue if value is absent. That is a fact. That is a fact, yo.
When you walk in the Gucci store, we don't talk about the price.
No,
Why? 'Cause we find
goddamn
the
it.
value. We walk in the Rolex store, we don't talk about the price.
I'm not negotiating,
No,
man.
they
Give
ain't
me-
negotiating with you.
Nope. Give it to me right now. That's the one I want.
Love it.
I'm trying to tell you, that was a gem. Look, all right, so we got the residual income play.
Yep.
We got the selling of your book of business play.
Yep.
You got the $500 low barrier of entry.
Yeah.
Man, I'm trying to think, what else can we talk about to help these people get off the fence? Like, and you said it only takes, basically, you just need to study
That's it.
and just get in the game.
That's it. Get in the game. Listen, this is the number. Google just showed everybody in this room. Hopefully you can find it. What is the #1 maker of millionaires in the United States? It's going to say financial services. Insurance falls under financial services.
Yeah.
So I'll tell you, get off the fence, get a good coach, come to Granger Financial if you don't have anywhere else to go. We'd love to have you.
Why should we work with Granger Financial? Let's talk about that.
Listen, we got 14 years in the business. I was one of the youngest black executives at State Farm on my way up the ladder. I'll give you my story. I walked in July 12th of 2019 and I got fired from State Farm for having outside businesses. On Monday, July 15th, my wife and I opened Granger Financial. On Tuesday, July 16th, we took our first client. So when you talk about why Granger Financial, bro, I'm just like everybody out there. I'm from Newark, New Jersey. I'm from the bottom. Like, I'm from it. So when people talk about, oh, this is for this is, nah, nope. If you got grind, if you got hustle in you, Granger Financial is where you should be. If you really care about people and you're mission critical, Granger Financial is where you should be. Because we're not just trying to make money. We're going to make an impact. The favorite quote my wife and I live by is, I heard Ray Lewis say it one day. Success is one thing, impact is another.
Facts.
Everybody in this room is successful. MG's successful. Tukes is successful. I'm successful. And most of these people measure our success by how much money we have or what we show on Instagram. But they don't really understand the impact that he's having on the community, that we go out every day and try and have on our community. That's what I want to be remembered by my impact. Not the money I had or how successful people thought I was. If that resonates with you, that's why you should come work with us. If it doesn't, listen, I love you. I'm going to pray for you and keep it pushing. But that ain't going to stop our show.
How do you start an insurance agency? Because you got fired,
Yeah.
and then on a Monday,
Yeah. I had great relationships.
Okay.
So everyone can't do that. I had great relationships. I had some people that put me right back in the game. Right? I had my boy Townsend Hargis and Jackie Hargis in Tennessee. And they're not black, they white couple, but my dog is my dog. He found out I got fired. He said, Jay, come work with me. I'm going to show you the independent game. He let me write business under all of his carriers. He signed me up, let me write business. I wrote enough business so fast, I was like, and then COVID happened. I said, yo, nobody's going to be calling these insurance agencies asking to be an agent right now. Mm-hmm. So I called every one of them like, yo, let me get a contract. And they were like, what? I had the background. I worked at State Farm. I qualified for everything under the sun. I was an MDRT qualifier, $1 million round table, top 1% of financial people in the world, all of that stuff. Showed them that, I got my contracts. So I started my own from that. So how you do it is, how you have to do it the right way is put together a business plan. Most of us have an idea and then we go do it with no plan.
Right.
You got to build the plan and then you got to work that plan. So I was able to show these companies that I had a plan to execute, and then they gave me, a 90 days, 1 year window. I had to write so much business, and we knocked the cover off the ball because guess what? During COVID, everybody was home.
Yeah.
And everybody was tired of talking to their spouse. So me calling the house was like, oh, yeah, I talked to you about my insurance today. He getting on my nerves anyway. We earn business that way. Mm. So it's a hard thing to do. I was fortunate to be in the business long enough to have relationships and bounce back. But I'm helping people start their own agencies under us.
So you gotta obviously have your license.
You gotta have your licenses.
Your licenses already. And is there a certain amount of years you need to be in the industry before you're because if you're a real estate agent, you go from being an agent to a broker, right?
Yeah.
But you need a certain amount of time of experience as a licensed person and a certain amount of sales, right? Is it the same thing on insurance end?
Yeah, you need a certain amount of sales.
Okay.
You gotta show proof, right? Like a lot of these companies aren't gonna take chances on brand new people because there's no proof of concept. We don't know if you can do it. And they put a lot of money behind us, right? Like they give us their whole platform. They put marketing dollars behind us, right? Right now I can write for Nationwide Private Client, Progressive, Travelers we just acquired the other day, Safeco, Liberty Mutual. So we have a bunch of carriers that we can write for. So we can place business everywhere. But a newer person would struggle to get those relationships because the sales rep would be like, you've never done it before. How do I know?
Yeah.
I was able to prove that I've done it before. And I had left the #1 insurance carrier in the United States. Mm-hmm. So I was blessed that way.
So you got your licenses, you got to have a certain amount of sales throughout your career. Mm-hmm. And then is there another fee you have to pay to get your insurance brokerage license?
Yeah, so that's a good question. So I'm licensed individually in about 20 states now, right? I had to also go and get my business, Granger Financial, licensed in every one of those states. So it gets expensive. It gets expensive.
So if it's $500 per state.
I just did California the other day. It was $326 just for me individually. Now I got to turn around and do that for my staff, and I've got to turn around and do that for the agency as well. But it's worth it because we know we'll write a lot of business there. Right. And those premiums are a lot higher. Mm-hmm. And then you got to write earthquake insurance, and that's expensive too. So
how do you guys have any effects on the rates at all?
We don't. I wish we did. One of my carriers does allow us to choose the commission. Yeah. And I make sure every one of our agents choose 10%.
So when you go to your insurance agent for, let's say, for a car, they are just telling you what the terms are. How do you make your money on these deals?
So we don't focus on the money on the deal, right?
Right.
We need customers.
Right.
Whether you're paying me $25 or $65,
yeah, I
need a customer because we need loyal customers to tell other people about us. If you look us up right now on Google, we have 5-star reviews. We don't have, knock on wood, any negative reviews yet. And I pray that we don't get those. But our promise to our customer is, let us give you an apples to apples comparison,
Okay.
and then let us tell you what you actually should have. Because when I educate you on what you should have, you would be surprised how many people say, dang, I didn't know.
Yeah, that's what I did.
And it's only $4 more? Yeah, I want that. Like, why wouldn't they tell me? Like, I don't know why they didn't tell you.
Yeah. So I mean, most people are probably running their business that way then, right?
Yeah. MG in the mortgage business. If you get a HUD statement that you didn't do, and you look through that thing, you're like, what is this? I just looked through one of my boys.
100%.
I just looked through one of my buddies' HUD statement the other day. He paid $7,000 for a 2-1 discount rate on his mortgage. I'm like, why would you pay that on? And he paid his mortgage. He did FHA and he paid his mortgage insurance premium out of pocket.
Why?
Thank you. The mortgage company that he went through told him that he needed to.
Damn.
He didn't come to MG.
He didn't come there. Should have came.
And he didn't call me. So he on a $300,000 home, he probably spent $21,000 out of pocket. Craziness.
Yeah. That's wild.
$7,000 to buy his rate down for 2 years? Why do that?
Yeah, but technically the seller is supposed to play that with the seller's concession, not him. So why is he paying for it?
Your guess is good as mine.
Damn.
They didn't come to MG. That's why they paying for it.
That's what happens, Tooks. We're trying to give you the game. You just got to come and follow the blueprint.
So you don't do you don't do a health insurance or anything, right?
We do. We do health insurance. Health insurance is very lucrative for people that get into health insurance, but you have to have the proper infrastructure to write group health. And at the time we were starting, we didn't have that infrastructure. I wrote my own group plan, and I've got a couple friends' group plans, but that's not something that I specialize in.
Got you.
Yeah.
And so when you're doing that kind of stuff, you can work with some of the biggest companies as well.
Yeah, we write United Health, we write Aetna, we write Cigna. I can get access to any of the carriers.
Right.
Because they want our business. They want business. Right? It's just about having the right mix, and for me, it's being able to service it properly.
What's the incentive for? So, like, do the companies give you some type of incentive to work with them? Because you have all these companies that are laid out, right? This is just how my head's working. Do certain companies say, "Oh, we'll pay you this kind of commission for if you get deals with X amount of customers," or you know what I'm saying? Because you have so many different companies to choose from, right?
Yeah. So the way they do that, and it's also regulated too, which is good for the consumer, right? It's not so much per customer. They'll give you, what they call profit sharing when you hit a certain amount of premium with that carrier. Gotcha. So that's a good thing, right? That makes me want to put more business with MG versus Tukes, right? If MG's profit sharing is 7% and yours is 4%,
I'm going with the 7.
Yeah, and if the product is comparable, right?
That's what I'm saying. The product makes sense too. Yeah.
But if you think about the carriers that I just talked about, they're all top tier carriers.
Right.
I don't write like the junk of the world just because we want to be associated with the best and not, the others.
So look, guys, if you got any questions, type them in the chat. We'll answer a couple questions. If you got any questions, right, type them in the chat. And Nina says, if someone is interested, how do they sign up? I guess she means how do you sign up with your company? How do they learn more about you guys? Yeah. Like, how does it work?
So at Granger Financial on Instagram, or you can send an email to info@Granger Financial. Put in your information, ask your question, and I'll have my executive assistant or I'll have someone in our office reach out to you and set a meeting up so that we can explain the rest of the process to you, or we can get you started on your way.
All right, I'm gonna go to Instagram and get your link.
Yeah, I have it in the description.
You have it in the description?
Yeah, his info is in there in the description.
Okay, good. Now I'm gonna put the website too.
Yeah, the website is not, but
yeah, I'm gonna put the website right now in the chat right now, just so they have it. And make sure you guys hit that like button for sure. Somebody said, Eric says, I got sales experience, but how do I get involved with insurance? Well, we just explained it all to you, Eric.
Yeah, you might have to go back to the
You might
beginning
have
of
to
the
go
video.
back to the beginning, brother. Shout out to my bro, Jay West, on the check-in. But you might have to go back to the beginning, my brother, because we kind of broke down the process of how you get licensed, how much the cost is, how to now you start your own insurance agency. We kind of went through it all.
Yeah.
All right. Any other questions on in here, Tokes?
There was, I don't think that was pretty much. It's pretty straightforward. I mean, I feel like it's pretty. There's really not much. I mean, unless it's something we didn't cover, but it seems pretty straightforward. You get your
Anything
license.
particular that you want to speak on that we probably didn't hit?
No, I mean, the only other thing that I think the hot button topic is right now is using the cash value in life insurance to borrow money to pay for down payments on houses and things like that.
Talk about it.
Those are really good things. There's a book by Nelson Nash called Nelson Nash called Infinite Banking. Become your own banker. I would tell you to go read that book and then reach out to like someone like myself or someone else to actually get involved with that part of the process. Couple books I want to leave you with besides House Hackonomics, and those books are The Power of Zero by David McKnight. Power of Zero teaches you how to get to a 0% tax bracket in retirement. And it's using outside resources of 401k and things like that, using life insurance to help you plan. Because did you know that your 401k money that you receive in retirement goes towards your Social Security benefit, right? Like if you make over $32,000 as a single person or over $44,000 as a married couple, your Social Security is taxed up to 85%.
Jim.
Very much a gem. And if you take that money and you put it into life insurance, we don't report to the IRS. So that money grows tax deferred. And then remember that key word we talked about in the beginning, annuitizing it to yourself or borrowing it from yourself doesn't count towards Social Security. So it keeps you at a lower Social Security tax bracket. Everybody in this meeting, live feed, needs to pull their Social Security statement every year and look at it. Make sure you're getting credit for your quarters and make sure you're getting credit for all of the things that you actually are working for. So that when you get to that point, everything's where it's supposed to be.
That was a freaking gem.
Yeah,
Big
that
gem
was,
right there. We got to clip that one. All right. So Alonzo says, can you speak about, what's this, LIRPs?
Oh, LERPs.
LERPs.
Yeah.
What's a LERP?
So a LERP, and not to go into grave detail, right? But a LERP is basically is overfunding a life insurance policy in lack of better terms. And we've kept it very simple tonight, and I want to stay in that place.
Yeah.
I want to stay in the LERP place. I mean, in a simple place for tonight, because I can get very, very granular and get detailed on LERPs and which policies we would use for those. But I think it would convolute how
The conversation went.
Yeah.
Let's keep it
but
basic.
not to what's his name?
Alonzo.
Alonzo, reach out to me. You and I can have an in-depth conversation on LERPs and
What is a LERP though? I'm curious. What does that stand for?
So a LERP is a life. Oh my gosh! Now you got me on the spot, and I can't remember the exact acronym. And I'll tell you. Hold on.
Let's Google it.
Let's Google it. But I know.
But who would benefit from using something like that?
Oh, several people. Depends on how you
Life insurance retirement plan. That's what came up.
No, but it's not just a life insurance retirement plan. That's what'll come up. But that's basically overfunding a policy.
Yeah, it says a life insurance retirement plan is a permanent life insurance policy that uses the cash value component to help fund retirement.
Yeah.
So it's a play.
It's definitely a play. But that play is something that you have to be very strategic in how you build out this play and this plan. Because for me, life insurance should be a portion of your portfolio. And life insurance agents will hate me for saying that. I'm not one that's like, yo, put all your bread over here. Let's do it. I think life insurance should be a portion of your portfolio, and retirement plans are retirement plans, right? And you have certain forms of retirement plans that you can use more or less of. If you don't qualify for a Roth, alert may be the way to go for you, because it's a way for you to overfund life insurance or put money that you typically have in savings accounts. Because Tukes, if you got, let's say you got 50 grand in savings and you die tomorrow, they just gonna get 50 grand.
Yeah.
But let's just say we took 40 of that 50 grand and put it into this LIRP or this life insurance plan and you died, they're gonna get the death benefit totally income tax free, which will be 2, 3, 4 times what you currently have.
Right.
So I think it's really important to take the conversation and be very much specific to each person.
Yeah.
But it's a good question around LIRP.
Yeah, I guess that's one of those you need more information, I guess.
Yeah,
Based on the
you need
situation.
more information around the person and what their actual goal is with the plan. And that's why I didn't want to get too deep into it.
It sounds similar to, like, the whole FHA versus conventional kind of
Yeah.
conversation we had the other day.
Yeah,
People
pretty
asking
much.
questions, and they don't have enough information in the chat.
I mean, I think this was definitely a great conversation. A lot of information. You guys might have to
Yeah.
go back here and replay this thing from the beginning and kind of take your notes, because Jeff was sitting here dropping a lot of gems. I'm actually going to watch this one over because there's a lot of clips in here.
Yeah, yeah.
And Will might struggle a little bit with this one. We might have to guide him
I mean,
a
it's
little
pretty
bit.
basic in the beginning,
Yeah, I
so
mean,
that's
it's some
the
great
questions.
information, but like it was like some real heavy hitting stuff in here where it was like,
Yeah.
oof, like that was good. You know what I'm saying?
Right.
But yeah, tell them how to find you again, Jeff.
You can find me on Instagram at Jeff Granger Jr. Our company is at Granger Financial. That's how you find us. Info at Granger Financial. And reach out to us. We love the opportunity to speak with you, man. We are excited about what we're doing. And like I told you, we are mission critical.
Yeah, man, look, and this is a great opportunity for all of you guys out there who are looking for another stream of income. I always say this, Tukes. If you want to get in real estate, why don't you get your real estate license? Why don't you become an MLO, right? Now, why don't you get into financial services? It's another stream of income. It can help you achieve your real estate goals much faster than you just having your traditional job.
Right.
So, a lot of you have problems with saving money. A lot of you have a lot of problems with qualifying for certain things because you're not making a certain amount of money. So why not invest into yourself and build your wealth? And look, financial services, think about this. You're going to pay $500 to get licensed to print money. And you're also going to learn. This shit is priceless, man.
Wait, I have a question. So I don't know if this is like for your field of work, but like, what is the best way like to save money? Like, let's say if I did have $50,000 just sitting in the bank, like where would you tell somebody like myself to put that?
It's always more questions. because the prudent person will tell you it's always more questions, right? Like there's so many more questions I'm going to ask you. It's like, what's your annual income? What's your monthly burn rate? How much do you need in savings in case something happens?
Yeah.
Right? Like the worst thing to do is tell you to put the person that tells you, oh, put it over here is the person you run from.
Okay.
Because they haven't asked enough questions to understand you.
You're right.
Right? So for me, it's way more questions. But if you ask me if you've got your short-term savings, you got your long-term savings set up, you maxed out your Roth IRA, you maxed out your 401k, then yeah, I may tell you to overfund a life insurance policy, or I may tell you to just go into an index fund.
Yeah, you talked about a couple of things there that we should have asked earlier, but it's all right. It's okay, no worries. I know you said short-term budget and long-term, but what do those look like?
So 3 to 6 months.
Savings, I'm sorry.
Yeah, 3 to 6 months of your income, right? And then it's also a comfort level per person for me.
That's short-term, 3 to 6 months?
I would say 6 months.
Okay.
Right now, 6 months. Because of the economy, 6 months, without a doubt. And it's really 6 to 12.
Wow.
Dude, it happens.
And that's just, so is that money just sitting there, not getting any type of interest on it?
It's going to be in a high interest savings account.
That's
Interest
what I'm
rates are
saying.
way up. I just got a notice today that like Union Bank's paying 4.5% on a high yield savings account. That's where it can sit.
Oh.
So because of the economy right now, when rates go up, I'm not fearful. I'm like, oh, I can make a little money right now. All right, well, this is what we can do. So I think, again, to go back to your original question, it's very much so ask more questions.
Right.
So I want to know how much money you make, how much do you spend every month, what's the budget you currently live off of.
Mm-hmm.
If everything went to hell in a handbasket, do you have enough money to live off of?
Right.
Because the worst thing to do is tell you to put your money somewhere, and then you need it, and now you got to take penalties out.
Yeah, I think that's why I said before. I think this life insurance, or speaking to somebody like yourself, people kind of fear because, you know, I think that nobody wants to be putting money where it's not going to make them money.
Yeah.
You know, or they're not spending money on something and getting something that's tangible, like you said.
Yeah.
So that's definitely another conversation, I guess, to talk about in terms of savings and stuff like that. Because
like financial planning.
Yeah.
Budgeting. That will actually be a good conversation.
Yeah.
I think it all flies into the mortgage part, right? Because a lot of people build up and fix themselves to get the house.
Right.
And then they don't know what to do after that. Because it's like, oh, we got to get you 45% debt to income so we can get you in this mortgage. And then you get in the house. It's like, all right, have a good day. You're on your own. And nobody knows what the plan is after that.
Yeah.
It's kind of like getting married, right? People spend $30,000, $40,000 to get married. And now you go into a whole life in debt. My wife and I got married for $6,000. And we made it work. We had a hell of a wedding with 175 people. But one of the things that my father-in-law is a military man, he said, I ain't going in debt behind y'all. And that resonated with me.
Yeah.
Like, we don't need to go into our marriage in debt.
Yeah, I could like 30 bands. That's what I was going to pay for my wedding.
Smart. You said was, so.
Yeah, no, I'm no longer with that person.
But again, it's all relative, right?
Yeah.
Like, we got married at 25, 26. We've been married 14 years, been together 18. So our monetary position at that time wasn't what it is today.
Right.
Now, if we would have gotten married today, I probably would have spent 30, 50 grand and I wouldn't have sneezed at it. It wouldn't have been a problem. But back then, we're not going into this like that. Nah. You know?
I don't know, 28. Well, I mean, you can make a lot of money if you're younger too. So
yeah, you can. But I just think it has to be a partnership, a union. And back to the mortgage part is after you get into the house, what is your plan next?
Right.
Are you planning annually with your spouse, with your significant other, hell, even with your children, to teach them how to move forward through these things? It's huge.
Big facts.
Yeah.
Big facts. You got more questions, Tukes?
What about risks? Because a lot of this stuff is risky, right? If you have to spend money to make money, how do you combat that?
Without risk, there's no rewards.
Yeah.
But when you're talking about savings, like, do these risks happen after you have everything lined up? Short-term savings, long-term savings, and so on? Like, how do you know when it's the right time to make those certain moves that you need to make?
So I think you put a team together so that you can know what to do, right? I think you have a financial planner.
Right.
It's huge, or a financial coach, whichever one you want to have. I think you need to have an estate attorney. I think you need to have a risk manager, like your insurance agent.
Yeah.
And then you guys meet together. The financial planner could drive the boat, and the other people around can help you navigate what it is that you should or shouldn't be doing. So having a financial team in place too. Sometimes people don't think that they can have a team, but they actually can. There's a lot of resources out there to help you get those things in place. And some of your insurance agents are duly licensed to do investments and do some of those things. Now, do you trust that advice 100%?
That's what I was going to ask my next question.
I mean, it's up to your comfort level if it's going to work, right?
Yeah.
But all of this is comfort, right? Everything that I just said could be bogus, right?
Yeah.
It's not, but everything you're saying could be. So it's really getting to you having a clearer understanding, doing your own due diligence,
Right.
Teaching yourself some of these things so that you know the right questions to ask, et cetera, et cetera.
Right. That makes sense. I think it goes like that for most industries as well, even for Matt's industry too. So
Yeah.
same thing.
Now, this was a great conversation. Great conversation. A lot of information, my
I
brother.
appreciate you, man.
Straight off the stock exchange.
Oh man, that was a good day today.
Straight off the stock exchange.
Listen.
Well, hold on. Let's talk about that real quick,
Yeah.
right? What was happening today at the stock exchange?
Bro,
Because I'm seeing a lot of powerful people in these
bro,
pictures.
Richard Lou Dennis and oh my gosh, man, he rang the bell with Pinky and the young lady from Miel that just sold her company to Procter and Gamble.
Yeah.
So it was all black business owners, funders, founders, all invited to NASDAQ today, and they rang that bell and they talked about, like, it was just, you know how y'all say high level conversation?
Yeah.
Bro, I'm sitting there eating some fruit, talking to Milan, and these guys are just talking about mergers and acquisitions to the left of me. Behind me, they're talking about global expansion into Kenya over here. And I'm hearing all of this. And I'm like, okay, that's a good, okay. So I jumped in that one for a little bit, jumped in this conversation for a little bit. And it was just one of those things where Mr. Dennis is just at a point where he's like, I want to build this out for 25 years and help us understand that we can be the future of venture. We can be the future of progress, of tech, and all of those things, because now he's gotten an exit which allows him to pour into everyone else. And MG may get the next exit that says, Tukes, whatever you want to do, let's do it. Because now I have the financial means and resources to do it. And I think it takes that for us as a black community to start to see that we can pour into others, because we're taught not to trust. We're taught to be very guarded.
Yeah.
We're taught that, nah, that's too good, and if it's too good, something ain't right with it. Sometimes it just really is good.
Yeah.
And it's okay to do it. But we look at good as a risk because we don't trust. And we don't trust each other.
Yeah.
It's a fact.
And what he has built a community of cross-pollination. Yo, you do mortgages? All right, everything that I get from my business is going to come to you. Oh, I do mortgages, Jeff. All of the insurance is going to go through you. We're going to make this, we're going to create our own community because they do it. Other people do it.
Yeah.
Right? But I think ultimately, man, today was special because for me, I had two bucket list things happen in February for me. One was I went to the Super Bowl. I was able to take my wife to the Super Bowl to see her Philadelphia Eagles lose. My bad. All the Philly people don't beat me up. I still like cheesesteaks.
Man.
And then number two was to go be a part of a bell ringing ceremony. And it wasn't an exit. It wasn't even an exit. It was the invite because of what he has been doing.
It's powerful.
Bro, those two things, I'm like, look, you can take me out of here now. Not really, but
Yeah.
like I didn't expect to have those things done by 40. I thought,
Yeah.
50s, something like that, I'd be able to do those things because I would have established a little bit more. But what's God's plan for you is his plan.
Absolutely.
So,
Dope. My guy, Jeff.
my guy, MG.
Make sure y'all tap in with my guy.
For sure.
Make sure y'all go to mgbookstore.com, pick up the books, the latest and greatest, mgbookstore.com, and pick up the webinars too, man. We just did a webinar Wednesday and Thursday for real estate professionals. I got a bonus day coming this Tuesday, 7 p.m. Eastern Standard Time, day 3, bonus day, right? So make sure you're a real estate professional, pick up that webinar along with the books. It's Friday. Be safe. Thank God it's Friday. Dress appropriately because this weather got bipolar. It's hot one day, it's cold next day, it's windy the next day, it's pouring down rain.
Yep.
I don't know what the hell's going on, right? But dress accordingly, drip responsibly.
Drip responsibly.
Drip responsibly.
I love it.
All right. So we out of here. We will see you guys on Monday. And Tooks, I want to talk about EYL University, powered by Recession Proof. On Monday, because people always talk about courses and should you still buy them and this, that, or that. Is it worth it? So we're going to do an open enrollment for EYL University, powered by Recession Proof. So I'm going to take you guys in the actual app live so you can kind of see if you are to join and become an RP earner, you see exactly what you're getting. I'm telling you, it's going to blow your mind away. So make sure you guys tap in this Monday, 4 p.m. Eastern Standard Time. All right? I'm out of here. Matt Garland, NMLS number 58700, but better known as MG the Mortgage Guy. Peace.